Picture this. It's May 2010. Bitcoin is a weird, niche internet thing that almost nobody has heard of. A programmer named Laszlo Hanyecz decides he wants to do something monumental. He wants to buy a real-world product using this new digital currency. So he goes onto a forum and offers 10,000 bitcoins to anyone who will order him 2 large pizzas. Someone in England takes him up on the offer, calls a Papa John's in Florida, and has the pizzas delivered to Laszlo's house. At the time, those 10,000 bitcoins were worth about $41. Today, as of September 4, 2025, those same 2 pizzas would be worth an absolutely staggering amount of money, somewhere in the ballpark of $400 million, depending on the day's price fluctuations. This single transaction has become legendary, a powerful symbol of how far Bitcoin has come from a fringe experiment to a global financial asset class. That story perfectly captures the mind-bending potential and the volatility of the crypto world. It's a space where fortunes can be made from what seems like nothing, and it continues to unfold every single day. We're going to dive deep into what's happening with Bitcoin right now, breaking down the latest news, the price trends, what the smartest people in the room are predicting for its future. But before we get into smashing the like button for the YouTube algorithm, I want to give you something for free. If you subscribe to the newsletter right now, you'll get my free guide, The 5 Pillars of Personal Finance, sent directly to your inbox. Let's get right into the numbers, because that's what really tells the story. Over the past several months of 2025, Bitcoin has been on a journey that could be described as cautiously optimistic consolidation. After the significant run-up we saw in late 2024, the price entered a period of sideways movement, trading within a relatively defined range. As of early September 2025, we're seeing Bitcoin hover around the $40,000 mark. This level has proven to be a significant psychological and technical battleground. For weeks we've watched it test this support, bounce off, and then meet resistance closer to the 45,000 and the 47,000 range. This type of price action, known as consolidation, is often seen as a healthy sign after a major rally, as it allows the market to build a stable base before its next potential move, whether that's up or down. Looking at the technical indicators, we can see a few interesting patterns forming. The 50-day moving average is currently trending just above the 200-day moving average, a formation that some analysts refer to as a golden cross, albeit a weak one. This is typically a bullish signal, suggesting that short-term momentum is starting to outperform long-term momentum. However, trading volume has been somewhat subdued during this consolidation phase. Lower volumes can sometimes indicate uncertainty or a lack of strong conviction from buyers, or a lack of strong conviction from sellers. It's like the market is holding its breath, waiting for a major catalyst to push it decisively in one direction. The key is to watch for a breakout with high volume, which would signal a more definitive trend is beginning. Now let's put this into a broader context. Year-to-date, Bitcoin is still up significantly, rewarding those who held through the volatility of previous years. The all-time high of over $69,000, set back in November 2021, still looms large as the ultimate target for bulls. The current price level represents a roughly 42% discount from that peak. This is where the two main schools of thought diverge. One side sees this as a massive discount and a prime buying opportunity before the next leg up. The other side sees it as a failure to reclaim previous highs and a sign that the momentum might be fading. The price action in the coming weeks will be critical in determining which of these narratives gains the upper hand. So, what should we be watching for? When it comes to predicting Bitcoin's future, you'll find opinions that are about as far apart as you can get. On one end of the spectrum, you have the unwavering bulls, people like Cathie Wood of ARK Invest. Her firm has consistently maintained an incredibly bold price target, suggesting Bitcoin could reach over $1 million per coin by 2030. Her thesis is built on increasing institutional adoption, Bitcoin's role as a hedge against inflation, and its growing use in emerging markets. She sees it not just as a currency or a commodity, but as a foundational layer of a new decentralized internet. These predictions are based on models that factor in a small percentage of global institutional assets moving into Bitcoin, creating a massive demand shock for its fixed supply. On the other side of the aisle, you have the seasoned skeptics. Think of figures like Jamie Dimon, CEO of JPMorgan Chase, who has historically been critical of Bitcoin, famously calling it a pet rock. While his stance has softened slightly as his bank began offering crypto services, skepticism in traditional finance remains. These critics often point to Bitcoin's extreme volatility, its use in illicit activities, and the lack of intrinsic value as major red flags. They argue it doesn't generate cash flow like a stock, nor does it have the industrial use of a commodity like gold, making its valuation purely speculative, driven by the greater fool theory, where you only make money if someone else buys it at a higher price. In the middle ground, we find more measured, data-driven predictions from financial analysts at major banks and research firms. For example, analysts at Standard Chartered recently reiterated a prediction that Bitcoin could reach $100,000 by the end of 2025. Their reasoning includes approval of spot Bitcoin ETFs, which have made it easier for mainstream investors to get exposure, and the upcoming halving event. These predictions aren't as astronomical as Cathie Wood's, but they still represent a more than 100% increase from current price levels. Analysts see Bitcoin's path as volatile but upward trending, driven by growing demand meeting a strictly limited supply. Ultimately, what we can learn from these varied expert opinions is that nobody has a perfect crystal ball. The most pragmatic approach is to listen to both sides. The bulls highlight the incredible potential and technology, while the bears remind us of the very real risks involved. By understanding the arguments from all angles, you can better formulate your own thesis and risk management strategy. The future price will likely be determined by which of these narratives wins out, and a huge part of that will depend on how governments around the world decide to treat Bitcoin. The regulatory landscape for Bitcoin has always been a complex and shifting puzzle, and 2025 has been no exception. The most significant development in the United States has been the maturation of spot Bitcoin ETFs approved in early 2024. Billions of dollars have flowed into these products, creating steady buying pressure. They let everyday investors gain Bitcoin exposure through regular brokerage accounts without wallets or exchanges. In September 2025, regulators like the SEC are shifting focus to custody market surveillance investor protection. The tone is more about integrating crypto into traditional finance safely. Europe is implementing markets and crypto assets this year. It creates a unified rulebook across the EU. Companies get a single license to operate across the bloc. Investors get better protection and transparency. MyCA is a landmark that could be a model for others, showing proactive, comprehensive regulation which is bullish for long-term adoption. But not all countries are positive. China keeps a strict ban and periodically cracks down. India has high crypto taxes that cut trading volumes. India is also exploring a CBDC. Capital and innovation flow to clear, favorable jurisdictions like the EU and parts of the Middle East such as Dubai, while they flee hostile or uncertain jurisdictions. The trend is moving toward regulatory clarity rather than bans. The Wild West era of crypto is ending. More rules mean more compliance, but it's necessary to attract big institutional money. Pension funds, endowments, corporate treasuries. A surprise regulatory crackdown is a major risk to price, but the global move to structured regulation is a powerful long-term tailwind for Bitcoin. Beyond price charts and regulatory filings, the real long-term value of Bitcoin is determined by its adoption. How many people are actually using it, and for what? In 2025, adoption is growing on several important fronts. One of the most significant is the increasing integration of Bitcoin into TradFi. We already mentioned the spot Bitcoin ETFs, Fidelity, BlackRock, Franklin Templeton. These firms aren't just offering products, they're investing in infrastructure, they're hiring experts, they're publishing research. This legitimizes Bitcoin as a viable alternative asset for diversification. That's a massive psychological shift from a few years ago. Another exciting area of growth is emerging markets. Argentina, Turkey, Nigeria. In these places, Bitcoin is finding real-world utility as a store of value. For many, it's not speculative, it's a financial lifeline. It helps preserve savings from currency debasement, and it's a permissionless, globally accessible asset. The Lightning Network, a layer 2 built on Bitcoin, is making transactions faster and cheaper for small payments. That increases utility for remittances, and for everyday commerce at local merchants. We're also seeing growing corporate-level adoption. MicroStrategy pioneered adding Bitcoin to corporate balance sheets. That trend has cooled, but a new form of adoption is emerging. More businesses are integrating Bitcoin payments to attract a global, tech-savvy customer base. Payment processors like Strike, they let merchants accept Bitcoin and instantly convert to local currency. That removes volatility risk for merchants. These practical uses are slowly building a medium of exchange foundation. Finally, the Bitcoin network itself is expanding. The number of active Bitcoin addresses continues trending upward. Developers are improving scalability, developers are improving privacy, developers are improving functionality, projects are being built on top of Bitcoin, expanding its capabilities. This organic grassroots growth may be the most important indicator. It shows a vibrant and dedicated community of users, developers, and entrepreneurs who believe in Bitcoin's long-term vision and are building its future regardless of daily price swings. One of the most powerful and unique features of Bitcoin's design is an event known as the halving. To understand it, you first need to know that new Bitcoins are created as a reward for miners who use powerful computers to validate transactions and secure the network. This reward is cut in half approximately every 4 years, or every 210,000 blocks. This continues until the total supply reaches a hard cap of 21 million, around 2140. The most recent halving occurred in April 2024, the fourth one. It reduced the block reward from 625 BTC to 3.125 BTC. The rate new Bitcoins are created was cut in half overnight. If demand stays the same or increases, but new supply is reduced, price should go up. After halvings in 2012, 2016, 2020, Bitcoin experienced massive bull runs. After May 2020 halving, price surged from under $10,000 to over $69,000 by Nov 2021. Now Sept 2025, we're about 17 months past April 2024 halving. Theory, we're in the middle of the window where supply reduction pressure builds. The consolidation now could be the market coiling up before supply-side pressure hits. So, after diving into all of this, what's the final verdict? Is Bitcoin about to explode? The honest answer is that the stage is certainly set for a significant move. We have a confluence of powerful factors, all pointing towards a potentially volatile and exciting period ahead. First, price action, Bitcoin consolidating in a tight range, building up energy after a strong run. This kind of coiling pattern often precedes a major breakout. Second, bullish long-term predictions from major institutions, balanced by healthy skepticism that keeps the market in check. The entry of firms like BlackRock and Fidelity has added legitimacy. Third, the regulatory environment is trending toward clarity and integration, especially in the US and Europe. This clarity is crucial to unlock large-scale institutional investment. Fourth, real-world adoption is growing steadily, as a portfolio diversification tool in developed nations, and as an essential store of value in emerging economies. And finally, the 2024 halving. Reduced new supply is exerting upward pressure on price. It's a classic supply squeeze scenario. All these elements combined paint a picture of an asset at a critical juncture. Key takeaway, the fundamental case for Bitcoin appears to be strengthening, but risks remain. Regulatory surprises, macroeconomic downturns, shifts in market sentiment. This is not a one-way bet. Demand from ETFs is increasing. New supply is decreasing because of the halving. That combination creates a powerful dynamic that's hard to ignore. Whether you're a seasoned investor or just crypto-curious, it's a fascinating time to be watching this space. The coming months will likely be pivotal in determining Bitcoin's trajectory for the next few years. Remember to do your own research and only invest what you are willing to lose. Thank you so much for reading. I hope this breakdown gave you a clearer picture of what's happening with Bitcoin right now. If you found this valuable, please consider subscribing to the newsletter. You'll get a free guide on the 5 pillars of personal finance when you sign up. Your support helps me continue to create this content. Next topic idea: a full breakdown of the Ethereum ecosystem and its upcoming upgrades. Or, a look at the most promising altcoins for 2026. Let me know which you'd prefer to see. Thanks again and see you next time.